everyone, my name is Teena Mathur. I'm assistant professor in Biani Girls College. Today I welcome you all on behalf of GuruKPO.com. Today I am going to deliver a lecture on the topic cash flow statement. Cash flow statement means it is a statement which shows various inflows. Cash flow statement is a statement which shows inflows in cash and outflows in cash during a particular period. It only includes cash transactions. Now, there are two methods of preparing cash flow statement. The first one is indirect method and the second one is direct method. So, cash flow statement by indirect method, it comprises of three categories: cash flow from operating activities, second one is cash flow from investing activities, and the last one is cash flow from financing activities. So, let's start with the cash flows from operating activities. The operating activities are those activities which are actually concerned with the main revenue producing activities. So, from cash flows from operating activities, how to calculate the funds received from operating activities. So, first we take net profit before tax and extraordinary items. Extraordinary items are those items which are not certain, which are actually uncertain, for example insurance claims. Then we add non-cash and non-operating items which have been already debited to profit and loss account, like depreciation, amortization, like goodwill written off, depreciation, we can say preliminary expenses written off. Then we less non-cash and non-operating items which have been already credited. It includes gain on sale of investments and profit on sale of fixed assets. Then our operating profit before working capital changes comes. Then we add or we do the adjustment in current assets and current liabilities except cash and cash equivalent and bank overdraft. So, we added those items, like if there is a decrease in any current assets except cash and cash equivalent, include inventory, we include receivables, we include debtors, and then we add if there is increase in current liabilities like creditors, and then we less increase in current assets and decrease in current liabilities. Then cash generated from operations comes. It can come in minus also, and at that time we use cash generated used in operations. After that we just deduct the income tax paid, and then our cash flows from operating activity comes. So, it can be used also, means when answer is coming in minus, when there is an excess of outflows. So, our next category is cash flows from investing activities. In this we include when we are purchasing any fixed asset, it means when we are purchasing the cash is outflowing, and it also includes sale of fixed assets or investment. When we are selling any fixed asset or investment, which means cash is inflowing in the business. So, our next category is cash flows from investing activities, which includes purchase of fixed assets or investment, which means it is outflowing of cash, and sale of fixed asset or investment means it is inflowing of cash because cash is coming in the business. And next is interest received. When we have taken bonds of any company, any debentures of any company, and we are getting interest on that, it is interest received, which is also part of cash flows from investing activities. Or if we have just taken any preference share or any equity share capital we have invested, then if we are receiving dividend on it, it also includes in investing activities. So, the total of this is net cash from investing activities if it is coming in plus, and if it is coming in minus, which means it is used in investing activities. So, our last category is cash flows from financing activities, which includes issuing of share capital. When we are issuing share capital or debentures, cash is inflowing in the business, and when we are taking any borrowings from bank, so it is inflowing of cash, and when we are repaying our debentures, it means cash is going out from the business. Redemption of preference share, which means it is outflowing, and dividend or interest paid on the securities issued by us. Then the total of this is net cash from or used in financing activities. If it is coming in plus, then it is from, or if it is coming in minus, which means it is used. Then the total of A plus B is net increase or decrease in cash and cash equivalent. If the summation is coming in minus or it is in used, it means net decrease in cash and equivalent, and if it coming in plus, which means net increase in cash and cash equivalent. Then we add cash and cash equivalent of the beginning of the year, and at the end we get the cash and cash equivalent at the close of the end of the year. Then in the summation we add cash and cash equivalent at the beginning of the year, and we get cash and cash equivalent at the end of the year, which is mentioned in our books of accounts. Thanks for watching this video. Please like, comment, share, and don't forget to subscribe your YouTube channel and visit our website grukpo.com. Thank you.